Worst day in the stock market since 2020. Why it's never been a better time to be a trader. And will the Fed come out guns blazing? All coming up right now. Good morning and welcome, guys. My name is Dane Funnemas on this beautiful Wednesday morning, the 14th of September. Guys, as we put out our video yesterday, it was a warning. There was massive things due to happen in the markets yesterday, and it was exactly the case. We saw a massive move in the markets. Now, in the event that you missed it, I'm going to link that video right over here. Go and watch the video from yesterday morning because it highlights and explains and goes to a little bit more details to what it is we were looking at. However, there are some contradictions, right? And this comes down to what economists are busy thinking versus what actually happens and transpires in the market. So without further ado, let's jump right in and let's get it started. So as always, we are going to be starting on the local front. And there's a few news articles that are out there, but in essence, one of the biggest ones that I feel is going to affect the South African rand and continue to plague us is going to be load shedding, and Eskom being an inability to get its house in order, right? Load shedding across the country has a massive impact on businesses, processes, just in general, everyday South African lives and the ability to be productive. So I feel this is probably one of the main headlines, and it's going to continue to drive that rand and scare away investors. If a country can't keep basic utilities like lights on, this is obviously a concern. So the rand is already in a very difficult position. We will look at it just now. There is a lot of other market opportunities, but I definitely think on local front, this is probably one of the items that is definitely plaguing the majority of South Africa. Now, guys, yesterday was probably one of the worst days in the last 2 years that I've seen in the markets. And, quick one, why is this a good thing to be a trader? Now, before I dive into why yesterday caused this massive plummet, the ability to be a trader means that we are taking a multi-directional approach, right? We don't have to be long on an item, meaning we don't have to be buying it, we don't have to be short on an item. We can be either or, right? And the ability to be able to participate in the market, whether it's rising or whether it's falling, means that we can actively participate in events that normally would be outside of every person's control. If you were investing into the stock markets in a one-way trajectory, meaning when you invest, you're hoping that prices go up. If you're investing into the stock market and you're not participating in those actual movements and benefiting from those trades, you're just a bystander. The ability to be a trader means we have an ability to get involved in all moves, whether positive or negative, and the goal is to be right more often than we are wrong. So that is why it's never been a better time to be a trader. So if you're watching me right now and you don't have a Globex 360 account, down in the description below, go and smash that link, open up your account. It can take you a few minutes, get it verified, get it funded, and make sure you participate with us. Every single day we're putting out brand new recordings as well as going live. So if you don't want to miss out, you don't want to be left behind, make sure you hit that link down below, get signed up, get registered, and join us in the Telegram group where we post updates over when we're going to be live, when there is going to be videos, and so much more coming soon. Now, moving into what happened yesterday, we got very high CPI numbers, right? Those CPI numbers essentially signaled that things have become more expensive across the board for the average American, right? All three major averages logged the worst day since 2020. Now, economists were saying that this number should come in good and we should be in a position where we start to see the peak of inflation, which is obviously why the Federal Reserve has raised interest rates, but that wasn't the case. We saw a jump in that CPI data, and this caused a massive move in the market. Now, the move in the market is what I really would like to discuss today, because traditionally, if we look at high inflation, right, we see things get more and more expensive for the average American. Inflation should signal that, there's going to be stressful times ahead. So you would likely anticipate or expect that the dollar will weaken. However, we're starting to see that high inflation doesn't necessarily mean a strong dollar, and there is a massive contradiction based on that. And I will be forwarding this article that explains a little bit more about that. But in essence, what it comes down to is the fact that the whole world is going through this inflationary process, right? Rising interest rates and essentially uncertainty in general. And at this point in time, markets are being driven by speculation because the dollar is a world reserve currency. Over 90% of transactions happen in the USD. Investors in the world are busy looking at the dollar and still seeing it as a safe haven, right? However, I'm not buying it fully, right? I see those types of inflation numbers and I think, wow, that's dangerous. So is it a contradiction or isn't? Let me know down below. But ultimately, it meant that bad CPI numbers, meaning prices are busy rising, actually boosted the dollar, and the stock market fell as a result of that. Now, the stock market fell as a result because what's coming up next is the Federal Reserve is meeting next week to raise interest rates, right? That interest rates raise is going to be happening. Now, whether we see a 75 basis point hike on the base interest rate, or we see an unprecedented something like 1%, a full 100 basis point hike, I think is what's going to be driving the markets over the course of this next week leading up to that data. Now, we are in a fortunate position that we do have some more data set to come out this week, but ultimately I'll also share this article in terms of what the Federal Reserve is set to do. So economists are saying 75 basis points. I do think we could see something even bigger than that, right? Majority of economists are between the 50 and 75 basis point theory. I don't know. I think the Federal Reserve is going to be under a ton of pressure to perform, and we could see something unprecedented rolling in. So I will be sharing these articles with you. Looking at the euro data, pound to dollar rates dropped sharply on US inflation data, meaning the dollar gained some strength across the board, not only on the pound, but on the euro. Across the board, the dollar dominated, right? And we are going to look at the charts and try and make sense of it. And this is why I always go price action is king, because we'd see that in the charts, and I'm going to show you that in the charts in a second. Looking at the S&P 500 heat map, guys, it is a bloodbath, right? We're seeing 5.5% of Microsoft, 5.87 on Apple, 5.86 on Google. This day is just in the red, right? So that shows how bad it was yesterday. Quickly looking at moving on into the economic and fundamental data coming out for today. We have some CPI data coming out at 8 o'clock for the pound. And then we're going to be focusing today on another opportunity, which is going to be core PPI as well as PPI. So producers price index is very similar to CPI, consumer price index, except based on the producer, right? So how much more are producers paying to produce the same product? And a higher than expected reading there also lends to inflation. The more cost to produce something, the knock-on effect goes over to consumers, and the more cost to buy that particular item. Now, just to give you an example, US CPI inflation is up over 8% year on year, right? Meaning if a person had an investment account at a bank and the bank was giving them 5-6% interest for that year, they're technically net poorer by 2 or more percent just based on inflation. And that's just how you have to see and understand it for the time being. But we are not here for inflation. We are here for the charts, and we're about to jump in. As always, we're quickly going to get started and move straight into that dollar index. Looking at the dollar index, guys, dollar pretty much used price action yesterday over everything else. We had a ton of economists, we had a ton of analysts saying it's going to do this, it's going to do that. What happened at the end of the day? Price action remained king, right? We had all these opinions. Ultimately, the dollar pushed down to that level of support, as I discussed yesterday, and just bounced straight off of it. No break of structure, just a concerted move in that structure. Now, quickly having a look at Euro USD, as I was obviously speaking about it yesterday, Euro USD was in a very vulnerable position, and that was one of the items we covered yesterday, that break could happen. And we saw that break across the board. Wherever there was a dollar quote currency, we saw those items fall, and wherever there was a dollar base currency pair, those rose across the board. Now, there are going to be some interesting opportunities available to us, but the one I would like to share and touch on is going to be USD ZAR, for the reason being that USD ZAR again proved that price action is king. The move was quite quick yesterday, and so we didn't have a lot of time to set up a pending order, obviously, to catch this item. But we can see USD ZAR pushed right back down to that 61.8, caught that level, found support, and then immediately shot back up off that floor. Now, do I think USD ZAR is going to the roof? No. Where do I think the dollar index is going? I think it's going to be quite bad, guys. Like, for this data to have come out, the Federal Reserve is now backed up into a corner where they need to do something big. Now, I'm spending a little bit more time on FX, and I'm spending a little more time on this topic because what's happening in the charts is going to be something we're going to be diving into, and we have to re-look at a lot of the price action. But I think you need to just fully understand the Federal Reserve is now backed up into a corner where they need to do something big. They need to react in a way that shows the world that this is under control and they know what they're doing. Because at this point in time, it does not look like they know what they're doing. They're raising interest rates and inflation is still rising, right? The whole point of raising interest rates is to reduce inflation. So this next move could be unprecedented. This next move could benefit the stock markets because high inflation, high interest rates generally lead to high yields and dividends on items that have already interest on them. So the stock market generally thrives off of high interest rates, where the currency market obviously doesn't. So I think we could see some very, very big moves in the coming days, and we'll see whether that trickles down into investors. Now, quickly jumping into US 30, this is an example and just showing you how bad the bloodbath was yesterday. US 30 pretty much gave away all of its gains that we have seen for the past week. So the whole week's worth of price movement to the top side has literally been wiped out. Now, important to note on US 30, we are currently sitting between that 61.8 and that 78.6, meaning we're sitting that no man's land. So a recovery on the US 30 above the 61.8, so a recovery above that 31,407 is going to be a potential sign that we are in recovery and breakout towards the buy side again. But a retest of that 61.8 is very likely, and a failure to break through could signal further losses towards that 78.6. Ultimately, we need to understand that US 30 is in a breakout, right? We have been in that 6-month trajectory, that 6-month bear market. We've done a breakout, and a retest is normal of that breakout, right? That retest zone is currently sitting at that 78.6, 88.2. So from a price action perspective, I would not be surprised for a deeper retest in those lower levels down there below. And remember to lock your trend lines as always. Okay, quickly having a look at where we are sitting on gold. Gold utilized that stronger dollar to pretty much give up its gains that we also saw over the past week. Gold broke structure, and now we're sitting in a new market where we could potentially see, gold start to take off. Now, if we start to see that the Fed is going to take a very aggressive approach, gold could thrive off of this data and essentially utilize that. On a weakening dollar, we will see a raising gold price. So that's something we'd be paying quite a bit of attention to. Brent did a perfect pullback to the 61.8, as I mentioned yesterday. Would you buy sort of Brent on a breakout? If you catch the breakout early, no problem. But ultimately, we were waiting for that retest. So Brent came back down, touched that 61.8, and then sort of started recovering. Last night I was speaking with one of our clients and said that I think there's going to be a buy opportunity on Brent. However, I didn't expect it to just touch the 61.8 and then move up again. That touch doesn't constitute a successful retest. We would like to see a breakout into new highs is what we want to be looking at on Brent. Now, quickly just wrapping up, looking at Bitcoin. Bitcoin also suffered in this move from yesterday, right? The stronger dollar, as I said, is inversely correlated with the price of Bitcoin, because a Bitcoin is priced in dollars, meaning a stronger dollar will essentially buy you more and more Bitcoin, and the price of Bitcoin fell. So again, we're seeing some positive correlation, and what we want to be looking at now, and I think what the focus should be, is are we going to see that weakening dollar, right? Will the Federal Reserve do enough to essentially pound into that dollar to get it back into shape, to lower those inflationary numbers. And if we do, it means we have multiple opportunities across the board. We have multiple opportunities on the stock market across indices. We have opportunities on gold. We have opportunities on USDR, as well as Bitcoin and commodities. So this next week is going to be major. Yesterday was a warning. We saw the ripple effect of that happening. Today, we're going to get that PPI data and have a look. If we get bad PPI data, right? So you need to understand, if the PPI data comes out higher than expected, it shows up on the fundamental data as green, right? In a traditional market, when producer price indexes rise, it's good for economy. When the CPI rises, good for economy. Not when we already at these inflationary highs. So if you see a positive PPI data, so it goes green, that is bad for the economy, right? Meaning producer price index rates have gone up, and it means inflation is falling very sharply. Again, that should mean a negative dollar effect. However, yesterday we saw that do the exact opposite. We saw that was a positive for the dollar. I'll send through that article about why that's a contradiction, and we can discuss that and have a bit more detail. But what's your thoughts around that? Why do we get all these economists around the world saying, this is what's expected, so on and so forth, and we see the exact opposite? And do you trust the fundamental data anymore? That's my big question, right? We're starting to see more and more that price action is king, and that the fundamental data is merely just nice to talk about at the end of the day. Guys, outside of that, we are having a ton of different load shedding schedules over the course of this week. So I will be putting out multiple videos in the place of some of the live sessions. So make sure you, as always, have liked and subscribed. And in this way, you never miss a brand new upload. So go ahead, like this video. If you know somebody who could benefit from it, go ahead and share it. And as always, hit that bell notification icon once you've subscribed so you never miss a new upload. Other than that, guys, as always, be safe, trade safe, and remember to do things the Globex 360 way. Goodbye.